But Tech Mahindra, which reported better than expected set of Q3 results. The net profit posted by the company is at 260 crore rupees versus 170 in the same quarter last year. Our correspondent Kritika Saxena caught up with the management and started by asking what were the key driving factors for this quarter. Let's just listen in.
So if you look at our quarter, our revenues were $269 million, which is a 1.6% growth sequentially over the previous quarter, if you exclude the one time which we had told you in the previous quarter, which was from that large contract that we had, $63 million. Within this, the trend that we see is in non-BT, there is a growth of 4%, other than rest of the world where we do system integration work, and always you tend to find revenues are a bit lumpy. So other than that, non-BT, there has been growth. BT is within the range that we had indicated, that it will be 70 to 72 million pounds. This quarter again is 74 million pounds, which was similar to last quarter. If you look at our EBITDA margins at 20.6%, they are about 100 basis points off last quarter. And the reason for that is this is the quarter in which our salary increases for our people internationally came into play, and also the rupee appreciated somewhat, both of which have impacted margins. At the PAT level, our profits are $57 million. These include our share of the Satyam results for first quarter and second quarter. Even excluding the Satyam share of our profits, overall we have a 10% sequential growth at the PAT level.
Okay, coming to the overall volume figure, volumes are flat this quarter. What was the reason for this? I mean, can you touch upon were there some specific geographies that impacted that particular, the flattish figure?
Which is what I was trying to explain to you, that if you look at the emerging markets, the work that we tend to do there is system integration work, and that is the sector in which our revenues this quarter have been lower, and it will always be lumpy, when you do that kind of work. So there are some quarters with very high revenues and others with slightly less.
Okay. Coming to attrition, which has been a concern across the industry, Sujit, can you share with us overall, is attrition still a concern for Tech Mahindra? Utilization has gone up marginally, but going forward, is that something that you will have to look into, and are there any levers that you will be putting into place?
Okay, attrition is at 30%, which is same as last quarter, and it is definitely a cause of concern. We are a little higher than the industry standard, but we have launched some plans last year, and we have again launched something in January this year in retention. And we have seen that in that group of about 4,000 people on whom we have given this retention program, our annual attrition is 6%. So that scheme has worked, and going forward we'll look at both plans, and we hope this attrition will come down drastically in the next 2 quarters.
Okay. Before coming to Ravi, one more question on BT. Since there has been the possibility of a stake sale from quite some time, after M&M acquired about 5.5% of BT's stake in Tech Mahindra, BT has in fact said that they are actively talking to people to sell the stake. Is there a possibility that M&M would look at buying out the stake or a part of it? And if at all BT does sell to a third player, would that be a concern for Tech Mahindra?
So, as far as the first question is concerned, only M&M can respond to you. On the second question, I think this is something which we have clarified a number of times, and I would like to reiterate that our business relationship with them has always been on an arm's length basis, and the shareholding in the business has never been correlated. So, I think that answers your question on